Hello and welcome to another video in which I'm going to explain why does Bitcoin move in this specific Bart pattern. As always, remember to open a new account on Bitmex, Deribit and or crypto facilities with my affiliate link, which you will find below in the video description. These links will give you 10 to 20% trading fee discount that will generate some huge savings over time. As always, comment, like and subscribe. So, you definitely have noticed that Bitcoin moves in a Bart pattern. Let's make it maybe 15 minutes. So, big move down, big move up, big move down and up. Why does it happen? If you look at the, let's say, USD to Euro chart, it doesn't move as erratically. So I should probably move to a daily chart to see all these moves, but it doesn't move like that. And I believe this is because there is more natural demand. The trading is more kind of natural supply and demand rather than gamblers just betting up and down, up and down. And this is how I see the current Bitcoin market. There are some people coming and buying Bitcoin, there are some people coming and selling Bitcoin, but the great majority are the gamblers sitting there and betting Bitcoin will go up, Bitcoin will go down. So they have, if you Google trading, you will immediately find some technical analysis videos, and they will show you how to draw a line, how to draw a support, resistance, some funny triangles, cup and handle, dick, whatever. And these patterns are supposed to tell you whether the price will go up and down. They will draw some funny lines on the chart, and based on that they will believe that the price will go up or down. They will set their specific take profit area, and they will set a stop loss. So that means that if the price moves down and catches their stop loss or liquidation, they will be forced to sell. Now, I believe that because there is little demand for natural trading and there is so much demand for gambling with stop losses and liquidations, I think this is the reason why the price moves so erratically. So let's have a look at my video, Anatomy of a Bitmex Pump. So in a normal market, someone comes, buys some euro for US dollars, the price goes up a little bit, and it can go down or move further. However, in Bitcoin, when someone comes and buys some Bitcoin, the price goes up a bit, but then it starts triggering all these stops, and then it starts triggering all these liquidations, and rather than moving just a little bit as it should, once it catches all these stops of all these gamblers, it erratically moves up. So this happens on Bitmex, this happens on every leveraged marketplace, Bitmex, OKEx, on Bitfinex as well. You get the liquidations and stop losses. Some exchanges allow you to have a stop loss, and this is why we get these massive and immediate spikes. And there are some important considerations, particularly when trading on Bitmex with stop losses. So the price goes up a bit, and then probably here some more stop losses get activated, and at this point the engine gets overloaded. Because there are so many stop orders, the system and the bots are sending so many requests because the price has moved. The system just stops accepting normal website orders. It might accept a few orders from a server box in the same server room if someone is collocated to Bitmex, but you can forget about executing any order if you are a website user. So about here, all the stop losses start getting activated, then the liquidations are triggered, and if you have your stop loss, let's say here at the last price here, you are put in a queue of orders which are getting executed, but the orders that were executed here have the priority. So let's say 100 guys got their stops about here. So the guy who got the stop at the lowest price will get executed first. So let's say that his stop loss gets executed here. But the other 100 guys will get executed higher up. So although you had your stop loss here, let's say at 3.55, sorry, at $3,550 or whatever that is, your stop could get executed, if you are lucky, at 3,570. But if you are unlucky, your stop will get executed here at 3,590 or 3,600. So this is why I hardly ever put any stop losses. I just tend to put enough margin to survive almost any move, and then if the price goes up and I don't feel comfortable there, I just manually close my position. And that means that I will not have my position closed by a very long wick like this wick here, because some people have their triggers here and they will get executed here and the price will immediately move down. So I think that overall this Bart pattern is because of all these stop losses and because of the gambling nature of Bitcoin, so because it's used for speculation rather than normal use, and all the people who take advantage of volatility, so all the market makers, they do earn money from these erratic moves. However, gamblers who have tight stop losses effectively lose a lot of money because their orders get executed. Well, they get triggered here but executed here. I'm sure that if you have set some stop losses, a lot of time you are fine, they got executed at some nice prices, but you definitely did get triggered in some places like here, but executed much higher, especially if you have higher size positions. Another thing is that you definitely had your stops triggered at a very top of the wick. So that's not great. In the past, the wicks on the futures contracts were very long, and I did catch them in 2017, but now I don't see too many long wicks, so I have stopped. I think they are well arbitraged, so I don't see any potential gains in that. So if you really want to trade this way with some tight stop losses, I would actually recommend going to Deribit in comparison to Bitmex. And the reason for that is that the volume is much lower, the order book is much smaller, but I think that relatively the Deribit order book is bigger in relation to the volume when compared to Bitmex. So I think Bitmex has higher volume in relation to the order book in comparison to Bitmex. And obviously if you have plenty of your stops triggered, you are paying taker fees, you are getting all this, all this slippage. So I think it's a really bad idea to have tight stop losses. If you think you will make a fortune on Bitcoin by drawing some funny lines which tell you when to buy, when to sell, I think you will lose a lot of money. That's probably the best scenario. If you pay too much attention to it, you might end up in a psychiatric hospital potentially, or committing a suicide. So trading is expensive. Every trade you execute costs you money, even if it's a Bitmex maker fee trade. Effectively there is slippage, and even if you get filled, you could have gotten filled at a better price. So try to execute as little trades as possible and make sure that you don't get triggered and executed at different prices. You can achieve that by going to Deribit potentially. If if you want to have your risk limited, you can consider going to Deribit and trading the options, but the options have very high spreads, so they are very bad vehicles for high frequency trading. So if you really want to set a lot of take profits and stop losses, I cannot really think of a good marketplace. I think you should just stop. Anyway, this is why I think Bitcoin moves in these Bart patterns. Thank you very much for watching. Please comment, like, subscribe. As always, open a new account on Bitmex, Deribit, or on crypto facilities with my referral link that will give you fee discounts, which will save you money. Thank you very much for your attention.